So yeah, so as we can see, we got this massive like spike. So we knew this was good volume. It was above our kind of median range, and it was a nice fall off, and it was rising volume coming in from this candle. So we got rising volume, rising spreads, and then boom, falls in. Good entry point. Again, our stops, we have to adjust our position sizing. I mean, you could be a bit risky and then go for this new high point, so which is relatively lower to this high point, but this became some kind of resistance, so we can see the resistance level dropping. Or we can put our stops above here and adjust our position sizing. At this point, we're locked in a day trade now, and we're kind of in the mid-range. We enter here, we see a bit of a struggle, a whipsaw action. People come in for this high to sell it, and they push it lower. So we see this massive fall, and look, we're approaching this support area. So if we look left, so we pull back against the chart, we can see it was a significant low point that the market was interested in to push it there. So we got almost like a complete revolution. Comes back in here. We got to get out. We got to take our profits off the table. It's really close. So the market opens. Hey, well, I'll tell you what. Even if we came in to take our profits at the close of this session, we would have taken our profits at 155.69, got out of the market, and then waited. We see volume falling off at this point, but look at the time as well. So again, it's like it was the end of the session. This was pushing more or less around about 8 o'clock, because this is 2 hours ahead. So yeah, so it's about 8 o'clock. It was really weak at this point. And as we can see, it rolls in, and the session finally closes about here. We get weak volume. It gets marked up, and then this is coming into the morning. So we wake up in the morning, and what do we see? Another volume spike. We see a hammer-like candle, and this tells us that people have taken this low to buy it up again. Now we could join this move where we see this candle. We get a nice pivot, so we could have entered here if we wanted to. We get fairly decent volume, but the spread is lower. It's a riskier trade, but we move in, we open, we put our stops, low risk trade, starts to move up higher. Again, we see rise in volume. It's incentive for us to stick with it. It pushes up, the volume's dropping off. We see a second volume drop off candle. Time to take our profits off the table. The market's struggling. So we move out of the trade, we close our position, probably on the close of this candle, and again, we're out of the market. And we see, again, sellers come in, good volume, rising spreads, rising volume, so we understand that the sellers are taking this level. And then we see if people had got in here, so they'd seen this nice pivot and decided to place a trade on the open, and then they'll be kind of in that trade at the moment, and they'll be kind of break even, close to break even anyway. So again, we see the markets establishing this area as a resistance area. So again, we don't see any more high volume, so we assume there's just retail trade buying. But now we can paint a picture. Just looking at this chart, we can actually see that sellers are in charge from here to here. Buyers try to push against them, but they're not winning the fight, because most of this price rise occurred at a point where we're actually looking at really low volume. So again, right to this top, the volume's low. It comes in again, and as we can see, the good volume is generally associated with selling. So we see this evening star type candle, you know, pushing these highs, and we see good volume, but they're all kind of below kind of our median range, so we're not too interested. Again, we see some rising volume again on this selling, so we see there's a general idea for the market to be bearish. And then we see on this markup, we see the volume's lower, we get another pivot. So again, we see this nice little pivot going on here. So it's telling us that this market is very bearish, because these guys who bought here, who sold here, are still in control. I mean, we can barely close about 50% of their position at the moment. So if we wanted to measure that, we can just use a Fibonacci tool, which is running on the downside, and let's see. So again, as you can see, we're struggling on closing just over 50% of their position. So now we can look at the market potentially going to roll lower, and really it's above, like, you know, now it's even pushed lower, so they're back in control again, and these guys are losing roughly about 38.2% of their particular position at the moment. So these guys are in a lot of danger. I mean, these guys are still holding on to more than 60% of their profits. So again, it's a good idea now to start looking at these other levels to push lower. So the point is that when we're intraday trading, we're taking into consideration where we are in the market, who the winners are, who the losers are. We're looking at the volume associated with the overall trend. So if is the volume associated more with selling than with buying, we're trying to consider the high points and the low points of the particular day's session relative to other days. So we know the areas that are peak areas for sellers and peak areas for buyers, and we know that this will be reflected in the price action. We're looking for these volume spikes that are above normal, and what are they likely to be associated with this. We know that at this point it's an absolute low point, and we see it's very close as well to a high point in a dominant selling area. We can assume that a lot of people took this, judging from the pressure. They took this high point, 156.97, but we also know that a lot of people came in and took this this buy area here because it's at an absolute low. So for now, we're going to assume that there are a lot more people interested in this low than there were sellers. However, sellers did control this particular session, so they did move it quite lower, and there could also have been market maker exaggeration about the move, but I personally think that there are a lot of sellers invested in this level, and we did get some buyers. We did see the price marked up a lot. So again, people entering here would have their stops taken, because again, the market maker is trying to look for liquidity. So a lot of stops have been lost at these highs. So at this point, we see the tail action. But the real idea is that if we put a mark against here, this is the high that we see to that came and dominated, and we had a seller dominated session. So this is the high that was guiding things, and then we know that the absolute low is here. So now a very good cue would come if this low was to break, then we know these guys are the guys. So this becomes our benchmark, and we want to keep an eye on this. Again, if we let's just put that back in where it was, right here. So again, this is the key. You know, this is what we're looking at. So again, if we're looking at now, we assume this is a high point. We know this area is going to be quite significant. We've seen selling pop back in. Now what we're waiting for is like another big jump in volume, and in whatever direction, and that's a good point to move with it. So again, this is how we trade volume on an intraday basis. So I hope this guys was helpful, and I'm going to leave you guys now and have a Merry Christmas, Happy New Year. I just thought I'll bring everything back to volume the way we used to trade it a couple of months ago, and yeah, we're going to be doing a lot of that in the new year. So catch you guys later. It's been more than a pleasure.